Aloha folks, welcome to another video. My name is Mark, Mr. Dividend Investor. In this video, I'm going to talk about 3 dividend companies that I have been buying this week. So hope you like this video. If you do, please do me a favor and hit that like button. And if you're new to the channel, just wanted to say welcome. I want you to hit that subscribe button. Hit that notification bell too, so you don't miss out on videos that I put out. I want you to join my little community of Ohana of investors as we invest in great companies and make some money in the stock market, baby. Just to let you guys know that I'm not a financial advisor, so this is not a financial advice. This is just me sharing what companies I'm looking at, what companies I'm buying this week. With that said, let's take a look at the 3 companies. First on the list is Altria, ticker symbol MO. This is many people consider this a sin stock. It is a company that operates as a holding company, engages in the manufacture and sale of cigarettes. In the US, they also do, they talk about those e-cigarettes too, so they're in that business. A lot more information if you want to invest in this is go to their website. Now, if we look at some of the balance sheets, as you can see, again, you can get all of these information in their website under investors. So if you look at their balance sheet, you can see the total assets from March 31st, 2021 is 48, and then the December 31 is the 47. So if we look at the total liabilities, you can see 48 and 47. Now you can look at the cash and cash equivalents. December 31st was 4,945, and then it became to 5,792. So those are the again, if it's not in thousands, it's in dollars, dollars and millions corrections in there. Now if we go to tip ranks, based on tip ranks at the time of this video, it was 46. Their price target is in the 55 with 19% upside. Now if we look at their 12-month forecast, you can see a high of 59, the average of 55, and the low 48. Their analysis rating puts it in the moderate buy based on 11 ratings, which would break down to 8 buys, 3 holds, and 0 sells. Now if we look at CNN Business to kind of get a comparison of what they think the stock will go in the next couple of months, they also rated it in the high of 68, medium of 54, and the low of 40. Now their analysis, if we break it down, it is considered a buy, 8 buys, 1 outperform, 10 holds. Now if we look at CNN Simply Safe Dividend, their dividend safety score rated is a 55, which is borderline safe. The dividend yield is 7.43, and then the market cap is 85 billion. Now if we look down to some of the key metrics, you can see payout ratio is 79%. They have increased their dividends during recession. Now if we look at the dividend growth, the last 5 years has been 9% per year, which is fast. The last 20 years, not so great, with 3% per year, which is slow. Now what I really like about this company is the dividend. So you can see from the chart, 51 years of consecutive increases in terms of dividend growth, and then more importantly, uninterrupted dividend streaks of 51 years without a reduction. So definitely a strong company in terms of dividends. Yeah. Now the payout schedule, you can see you'll get paid quarterly in the months of January, April, July, and October. The annual payout will be $344. Ex-dividend is June 14. Then you get your payday on July 9. So now if we look at Simply Safe, Simply Wall Street, you can see based on the share price and the fair price, it is undervalued compared to the share fair value. You can see here it's 55% undervalued. The fair value is 104. Currently it's at 46. So now if we look at my position in Robinhood, you can see I have about 35 shares of it. Average cost is 47. My total return, I'm down 3%, down 53%. So I'm not worried. Again, my goal is to probably hit 125. That would be the goal for me. Maybe go as much as maybe 300 to 400, but I'm going to target 155 right now in the next couple of months. So I'm definitely going to continue to dollar cost average as I get to 125 shares. Next on the list is Stag Industrials, ticker symbol STAG. This is a real estate investment trust which focuses on acquisition, ownership, and operation of single tenant industrial properties through the US. So you can see on their website, they are in 39 states with about 494 buildings. Their enterprise value is at $7 billion. Now, if we look at the presentation, PowerPoint presentation, some of the acquisition updates. 2021 acquisition volume guidance range from 800 million to 1.2 billion. So you can see some of the acquisition activities. So they acquired 1.3 square feet across 6 buildings for 100 million. Cash capitalization rate equals to 6%. 55 million acquired under contract and subject to a letter of intent, expected to close in 2021. And they have acquired 3.5 billion acquisition pipeline. So you can see a little bit more. Cash on balance is about 15 million. And then you have net to debt ratio. Total estimated liquidity is about 749 million. So you got more information there. So if you want to take a look a little bit more, go to their website and look for the PowerPoint presentation. Yeah. Now let's look at tip ranks. At the time of this video, it is $38 with the price target at 38 and 0.79 upside. 12-month forecast rated as a high of 42, the average of 838, and the low of 37, with the rating of moderate buy based on 6 analysis, 4 buys, and 2 holds. Now, if we look at CNN Business, their forecast rated also similar with a high of 42, the medium 37, and the low 32, with the analysis recommendations of 4 buys, 2 outperforms, 4 holds, and 1 underperform. Now, Simply Safe Dividend, based on their dividend safety score, they rated a 45, which is borderline safe. Dividend yield for this company is 3.81. Market cap is 6 billion. Going down through the key metrics, the payout ratio is 79%. No dividends paid on the previous 07-09 recession. Now, if we look down to the growth, very slow. Last 5 years, 1%, which is very slow. Now, if we look at the streak, it's been 9 consecutive increases for 9 years, uninterrupted for 9 years. But the thing I like about this company, you'll get paid monthly. So that is something that I really like. So your annual payout is $1.45 with the ex-dividend date of June 29, then you get paid in July 15. So now if we look at Simply Wall Street, their valuation is based on the share price and fair value. It is undervalued. Their fair value rates it at the 83, and the current price right now is at $38. Now, if we look at my position in Robinhood, you can see my average cost is 37. I have a small position of 10 shares, and then total return is 1.65%. So definitely going to, again, my goal for this one is to get onto 125 shares, and then possibly more, but Once I get to 125, I'll stop a little bit, but again, probably hit about 300 or 400 shares, but I'm gonna try to get 125 at some point in the next couple of months. Last on the list, Walgreens, ticker symbol WBA. Again, this is a company, very popular company amongst investors. It engages in the provision of drugstore services. So they operate as a retail drugstore, health and wellness service. I like this company. I shop in Walgreens a lot. Now, if we go to tip ranks, at the time of this video, it is at $50. The price target is at 57 with 12% upside. 12-month forecast rated as a high of 72, average of 57, and the low of 50. They do rate it as a hold, which only 1 buy and 11 hold. Now, if we look at CNN Business, now based on CNN Business, you can see their high is at 72, the medium is 56, and the low is 37. Now, if we look down to the analysis recommendation, pretty similar. 17 holds, 1 buy, 1 outperform, 1 underperform, and then 1 sell. Now, if we look at Simply Safe Dividend, based on their dividend safety score, they rated at 79, which is safe. The dividend yield for this one is 3.68. Market cap is 49 billion. Now, if we look down to the key metrics, you can see the payout ratio is 42%. They have increased during the recession. Looking at the dividend growth, you can see the last 5 years it's been up 6%. The last 20 years it's been up 14%, which is very fast. Now, if you look at the growth, you can see 45 years of consecutive increases and 45 years of uninterrupted dividend streaks, so which is something that I always look for. So definitely like this. Now, your payout schedule quarterly, which is March, June, September, and December. The annual payout is $1.87. Ex-dividend date is on May 20th, with your payout date is on June 11. Now, if we look at Simply Wall Street, based on their evaluation, they rated it as undervalued, 57% undervalued. Their fair value rates it as a 119, and the current price is $50. Now, if we look at my position at Robinhood, I do hold about 10 shares. My average cost is $52. My total return right now is negative 2%, negative 3%. So what my plan is for this one is, again, gotta try to hit 125. Eventually, once I hit that, maybe go to like 200 to 300, but by 125 is my target. So gonna keep trying in the next couple of months, dollar cost average as we go, and that is my plan. Now, thank you so much for watching. Hope you liked this video. If you haven't done so, please give it a thumbs up. As always, please remember to do your own due diligence, do your own research, and always make sure that you're investing in companies that you understand. Thank you so much for watching, guys. I definitely do appreciate it. As always, please remember to be safe out there. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.